When Finance Minister Enoch Godongwana tabled the national budget on the 12th of March, he indicated that National Treasury forecast economic growth to come in at 1.9% for this year, a figure that astounded many an economic observer given the country's current challenges. This past week, the IMF said it had revised the country's economic growth forecast to a mere 1%, down 0.5 percentage points on its prediction earlier in the year.
We have got to go back and incorporate that into our forecast. And that has serious implications for growth, for both our growth forecast and our revenue forecast. What will come out of that is difficult to tell at the moment, but those are the challenges that downgrading may mean.
Godongwana was asked directly about what led to his decision to U-turn on the VAT increase, a decision that has hugely inconvenienced retailers and service providers in the process.
You will recall that Parliament, in accepting the fiscal framework, made a condition that during the next 30 days I must focus on the proposals that are going to be submitted by a number of political parties. And I did exactly that and looked at those proposals of the different political parties in order to find revenue sources to replace the VAT. That was the broadly proposition that emerged from Parliament. I have done subsequent to that in consultation with this and looking at this proposal from these political parties, came to the conclusion that we might well find some resources with additional revenue from SARS.
Meanwhile, Reserve Bank Governor Lesitsha Kganyago reflected on talks among central banks at the meetings around how inflation had been evolving in recent years and how central banks have been dealing with it.
There was also a sense that the disinflation process that was embarked on in the aftermath of the great inflation of 2022 is slowing down and in some respects might actually be reversed, which had led central banks to be cautious. But again, there is huge heterogeneity. There are central banks which are on target and or closer to their target. They have got the space to provide monetary accommodation. But there are central banks that are further away from targets where the disinflation process is also being slowed down, and that central banks would need to remain vigilant. And in a sense, those were the reflections on the global economy.
Kganyago reiterated that trade policy uncertainty remained a real threat to global and local economic growth, and also warned that the much weaker rand against major currencies, if sustained, had the potential to place upward pressure on inflation, making it more difficult for the Reserve Bank to lean towards further monetary easing going forward. Nampumelo Siziba, SABC News, Johannesburg.